Welcome to my step-by-step guide to buying a home in Nova Scotia in 2025. This is the Home Buyers Seminar for people who don't have time to go to a home buyers seminar or maybe just don't want to go and sit through one. So let's start with who I am. I'm Cheryl Cook. I love homes and I'm a realtor with Remax Nova here in Halifax, Nova Scotia. I'm also an accredited buyer's agent and seniors real estate specialist. And who are you? Well, potentially you're a first time home buyer, or maybe someone who hasn't bought a home in a while and would like a refresher, or anyone who's interested in the process of purchasing a property in Nova Scotia. Today, in this webinar, we're going to be covering the 6 basic steps in buying a home from before you even start house hunting to after closing. And then I'm going to be going off track a little bit and in depth on some of the topics, such as pre-approval, what makes a good offer, what are closing costs, down payments, deposits, and a lot more. Things that I don't typically have time to include in shorter videos. But before we get going on the steps, let's talk about some of the terms and words that I'm going to be using. I want to be sure you've at least heard them and their definitions once, and you have somewhere to come back to refer to them if you'd like. So starting with the agreement of purchase and sale, this is the legal contract between the buyer and seller that outlines the terms of the purchase of this property, and we often call this the offer. Conditions are clauses in that agreement of purchase and sale for the buyer or seller that have to be completed before the sale goes through, things like inspection and financing. The down payment is the portion of the home's purchase price that the buyer pays upfront. That's not part of the mortgage. A deposit is related to the down payment, and I'll explain that later, but it is a sum of money that's paid on an accepted offer by the buyer, and it goes eventually towards the down payment. And then we have closing costs, another one that I'm going to take a closer look at later, but these are expenses paid at or before closing that are separate from your down payment. Then we have one of the most basic terms, the mortgage. So the mortgage is a loan from a bank or lender that's used to buy the property, where the property itself is the security for the loan. And that's why it's really important you don't default on your mortgage payments, because they can then take the home, which is the security. Pre-approval is a lender's written estimate of how much mortgage you qualify for based on your current financial situation. And we're going to talk about that one for sure. Home inspection is an optional but highly recommended assessment of the property's condition by a certified inspector before the purchase firm's up. And appraisal, this is different from a home inspection. This is an independent estimate of a property's market value. That's often required by the lender before they will finalize a purchase on the property. And then we have a really important definition here. Who is a first-time home buyer? In Canada, a first-time homebuyer is considered somebody who, within the 4 years prior to the purchase, and not in this calendar year, has not owned or occupied a home that they or their current spouse or common law partner owned. Also, so this will then include someone who's never owned a home before, or who hasn't owned one in 4 years, or hasn't lived in one that their spouse or common law partner owns. But it will also include people who have experienced a recent breakdown in their marriage or common law partnership. So if you have recently experienced a breakdown of a marriage or common law partnership, you may also qualify as a first-time homebuyer. And at the end of this video, I'm going to give you a QR code that takes you to a page on my website that will give you links to all of these topics and programs and services that you're going to see here, so you can learn more about them. But now let's start on the 6 basic steps. And as I said, occasionally I'll take short detours to go into more detail on some of these areas. So here are the 6 steps. You have pre-approval, hiring a realtor, house hunting, making an offer, conditions and firm up, and closing. And we'll begin, of course, at step 1, pre-approval. Now, why do realtors never stop talking about having to get pre-approved? Why are we always on about it? Well, it ensures that a lender will, in fact, give you a mortgage. And that is a very fundamental part of being able to buy a home. Obviously, if you're financing it, you'll need that. And this is more than just going online and filling out a form. And I'm going to explain that process in a minute. But making sure that a lender has actually given you a thumbs up before you start is very important for a variety of reasons. And these include setting a budget. So, understanding your pre approval means you understand your max budget. Now, you may be pre approved for, I don't know, $700,000, but you may have decided you only want to spend $550,000. And there's nothing wrong with that. But understanding that maximum that they're willing to give you means that we're not going to be looking at properties you can't afford. And we're not going to be making offers in an area above your maximum amount that would then not get approved. Another important reason for pre approval is that in competing situations where there are other buyers, sellers are often looking for a pre approval. They may simply call me and ask if my buyer is pre approved, or they may actually ask for a pre approval letter to be submitted with the offer. That is not uncommon, and that is the seller's agent doing their due diligence to make sure they are trying to find the best offer they can. And that often means making sure they're removing as much of the risk in the offers as they can. So they're looking for people who have their ducks in a row and are ready to make a purchase. So, what do you have to do to get a pre approval? Well, first step, contact your lender or your mortgage broker. So, if you work with a bank and you want to stay with that bank, they'll put you in touch with a mortgage specialist. You can also go see a mortgage broker. Their services are also free, and they generally check with a variety of lenders. So, they have access to a variety of different mortgage products, whereas your bank will only be accessing their own products. So if you want to stay with your bank, that's fine. I also tell people it doesn't cost you anything to go to a mortgage broker and talk to them about what's possible as well. Now, the next thing you do is you have to get all your paperwork together for them. We're going to talk in a minute about what some of that is. So this is not the process where you're online and you type in a bit of information about your income and your debts and they go, you could be pre-approved for this amount. This is a full process. You will be aware that you're going through it, and they're going to be asking for a lot of paperwork. Once that's all submitted and everything goes through, then hopefully you get your pre-approval letter. And that's actually an email, but you'll actually get something from the lender that says you're conditionally approved up to X amount. Now, if you don't get pre-approved for some reason, what your mortgage specialist or mortgage broker should be doing is giving you a roadmap to getting pre-approved, showing you the steps that you'll need to take and helping you understand those so that you can go away, do the work you need to do, come back and get that pre-approval. Okay, so the next part of step one is what are they looking for when they're doing a pre-approval? There's a lot of different things they look at, but some of the most typical things here is that they're going to be looking for a credit score of 680 or above, income and employment status, so they may be asking for pay stubs or letters of employment, notice of assessment from the CRA for your income taxes, and they're also, if you have any outstanding personal income tax, you're going to need to pay that off. Financial statements from the bank, and the reason they're often looking at those is to see where your down payment funds are. Could be 5 to 10% of the purchase price of the property or more. So they're looking to see that you have those funds. And they're also likely going to do a stress test, which means they'll imagine that you're getting a mortgage at X interest rate. They'll up that interest rate a bit and see if you can manage a bit of financial hardship. So that's what the stress test is basically. They're also going to look at your gross debt service and your total debt service. And we're going to look at these in a second. Going a bit more in depth here, let's look at down payments. Now, the down payment that they're going to tell you they require can vary greatly based on things such as your employment, your credit score, all of those things they're going to be looking at. But in Canada, basically, for a home, $500,000 or less, the minimum is 5% of the purchase price in a down payment. And then if the home is priced between $500,000 and $1.5 million, it's going to be 5% of the first $500,000 and then 10% on the remainder. If the home's over 1.5 million, they're going to be looking for 20% down. But again, all of this varies based on your situation, and that's one of the reasons they're doing all that work with you. Now, what's this GDS and TDS that they're looking at? That's gross debt service and total debt service. So they're looking at the percentage of gross income that's going to your monthly housing costs. So mortgage, property tax, heating costs, if you're in a condo, 50% of the condo fees. And they want that to be 39% or less. Then your total debt service, they add up all those housing costs again, and onto that, they'll add any other debt that you have, which would be car loans, lines of credits, credit cards, anything like that. And that they're looking to be at 44% or less. So these are some of the things they're going to be looking for when you get pre-approval. So when I say it is different from just filling out one of those forms online, you can see it really is. It's a process, and this is why we recommend you begin that before you start house hunting, because it's going to define, first of all, your budget, but it's going to take a bit of time as well to get that done. And we want you to be ready when it's time to make an offer. So step two is then hire a realtor. And I know what you're thinking. Of course, she's going to say hire a realtor. She's a realtor. Listen, there is a percentage of the population who will always want to do this process by themselves and not use a realtor. And there's nothing wrong with that. And then for the people who would like assistance, there are licensed realtors like myself. Now, in Nova Scotia, in the vast majority of cases, the services of a realtor for a buyer are free. And here's why. The person who is listing their home, when they sign up with an agent and the brokerage, they decide on a commission they're paying that listing agent. That's actually paid to the brokerage of the listing agent. That percentage commission is then they outline what portion of that they're going to share with the brokerage of the agent who brings the successful buyer. So the buyer's agent commission comes from that. So for buyers, in the vast majority of cases, these services are free. So for nothing, you're going to get somebody who is contractually obligated to work in your best interest. We have a list of duties that we have to go through with you to explain what our obligations to you are once we have signed a contract. And we're there to work in your best interest. We're there to walk you through the process, explain everything you're doing, explain all the paperwork, help you fill it out, advise you on homes, market conditions, offers, negotiate with you, negotiate for you, present offers back and forth quickly. And we're also there to use our toolbox of knowledge and experience to help you through a complicated process, purchasing what may be the biggest asset you ever own, and trying to make this process as stress-free for you as possible. So, how do you find a realtor? As always, I say talk to your family and friends, look at reviews online. But when you talk to family and friends and you ask them, who did you use and did you like them? They say, yeah, I love this person. I love this. Then ask them, why did you love them? Because using a realtor is a very, we're together for periods of time, working on stressful things. It's a complicated process. And you want to find someone that meets sort of your criteria for knowledge, experience, and personality as well. And so what somebody is recommending a realtor for can vary, whether or not they found the personality more important, the knowledge or experience, or how they communicate, all of those things. So talk to them not only about who they liked, but why they liked them, and then interview a few realtors and find that person that matches best with you. Now, once we've done that, we get to do what I think is one of the best parts, not as good as closing day, but still pretty good, and it's house hunting. So with most things here, I always talk about doing a lot of stuff up front. Webinars like this are upfront work helping you understand the process of home buying so that it's not all brand new and stressful when you're doing it. We're trying to manage as much of that as possible through education. So for house hunting, one of the upfront pieces of work I love to see done is a list of needs and wants, even if it's a mental list. It doesn't even have to be written down. Things that are needs are going to guide this process. They are the things that you're pretty sure you can't be flexible on, whether it's a school zone you need to live in, or how many bedrooms your home needs, or the age of the home. These are the things that you think are the needs. And then we have the wants, which are the nice to haves. Then we begin actually going out and seeing homes. And I recommend, even in areas like the greater Halifax area, where there may not be the most inventory to look at. I mean, we may not be back in the days of being able to go out on the weekend and look at 20 houses that all fit your criteria. But I still recommend seeing as many houses as we can, because each house is an education for you, not just in houses and what you learn about them, but also in your needs and wants for any given house. The more houses you see, the better off we are in terms of your decision making. And I know sometimes people come to me, and people actually have come to me and said, I want to use you as my realtor and I want to buy this house right here. And I will talk to them. But in the end, if they really want just that one house and we're just going to go look at that house and they want to put an offer on it, we can do that. But for most buyers, I really do recommend, let's get out, see a bunch of houses, see what we can. And when we're actually in a house, so the process for me of taking someone to see a house usually starts on the outside. So we'll begin by walking around the property, taking a look at the exterior of the home, looking at what we see there, and then go into the interior. But it's important to remember that this isn't a lovely house tour. It's extremely easy to see the nice parts of houses. They're right there in front of our eyes. But what we're also looking for is a critique of every house that we're in. We're looking to find problems before you ever get to the point where you want to make an offer. Now, we can't see everything, we don't have specialized tools, but we have our eyeballs and we can do the best we can with knowledge about homes and what we're looking for. So we're not just looking at the lovely kitchen or the wonderful backyard. We're going down into the basement, looking at the utility, looking at the guts of the house, the plumbing, the heating systems, the roof, things like that. So it's a full look at the home with as critical an eye as possible. And once you start looking at a variety of homes, you may find that you naturally find some flexibility there between your needs and wants. Some people discover things they thought were optional aren't, and vice versa. But as flexible as you can be, people are always looking for price and the condition of the home, location of the home, type of home, all of these things. If you can be a bit flexible on one or more of those, especially in a market where there are other buyers also looking at the same homes you are, competing for those, that really does give you an advantage. And being prepared to move quickly is really important if you're looking in areas where we see, for example, if you're in $550,000 and under, this is early 2025, in the Halifax area, you're probably going to be competing with other buyers if it's a decent home. So in that case, you may have to move fairly quickly. And when we say quickly, we mean maybe be prepared to go see houses quickly. Also, be prepared to decide if you want to make an offer quickly. But what we want to avoid is that feeling of pressure and panic. So doing this sort of work up front, talking about this, discussing the homes while we're in them, giving you things to think about that when you leave the home. These are important parts of preparing you to be able to move quickly without feeling too much pressure or stress. And finally, it's important to remember there's always another house. And I know sometimes the house you're looking at seems like the absolute perfect one, but you might make an offer and the seller may have preferred someone else's offer. It's easy to get a bit disheartened, but I am nothing if not persistent. And I like to remind people that there is no perfect house, so there will always be another house. So now you have found a house you like and you want to make an offer on it. So every offer is similar paperwork, but each offer is different. So I'm going to work with you based on the budget, market, particular property you're looking at, any competing situations we might be in. And from this, we're going to try and craft the best offer we can for that seller. And in any situation, when you make an offer to a seller, they can either accept it, reject it, or send you a counteroffer where they might ask for some changes. Now, let's talk a little bit about what makes a great offer. There are some basic constituent things to a good offer: price, condition, closing date. Deposit in some markets is a lot more important than it is in the market here, but I'm still going to talk about it. And the importance of any one of these, especially price, conditions, and closing date, can vary from seller to seller. So it's really important that we're thinking about them. So let's start with price. What are the factors in determining what price you're going to offer for a given property? Well, the very first thing to consider is, what is this home worth to the market? And it's important to remember that list price isn't necessarily market price. If you are in an area where, let's say we know this home is a good home, good condition, in a nice location, and we know it's packed full of showings and there's likely to be multiple offers, that list price may be a little bit low because they're looking to get competing offers in. So what we're going to do is look at homes that have sold in the area. What condition are they in? Are they similar to this one? We're going to do our comparables and try to figure out what we think this home is worth to the market. And it's not just about what has sold recently there, but it's about market activity that we're seeing right now and buyer activity that we're seeing right now. What do we feel buyers are prone to do here? And there are some other basic factors we want to understand as well. Days on the market. Is the house brand new on the market and we're seeing a lot of chatter around it, a lot of showings? Or is this a house that's been sitting on the market for 30 days that you've decided to go look at? Now that obviously is going to have an impact on how we think about price. If the home is sitting and no one's making an offer on it, we might be going in a little bit lower and seeing what we can negotiate. But if the home has recently come on the market and we know that it looks like they're going to have some competing offers, or in the situation where we are told there are other offers, then that's going to affect your price as well. And it's also important to consider the condition of that home. Is it like a true fixer-upper? Does it need some love? Is it a home that's been renovated? If it's been renovated, does it look like a professional renovation or does it look like a DIY special? Some sellers may feel that their DIY renovations are worth money. We may beg to differ on that. Or is it a brand new home? All of those things are going to play into as well what we think this individual home's real value is and its value to you as well, which we're going to talk about. So, what is this home, this particular home you think you're making an offer on, worth to you? And that can vary a lot. So, you could have two homes that are almost identical, but if one of them is in the exact location you were hoping to be in, that home is going to be worth more to you than a home that isn't in that location. So, from home to home, property to property, the value of it to you is going to shift. And that's the difference between making an offer where you're like, we'll put this offer in, but if we don't get it, or we are motivated because we really want this house. It ticks off almost all of our boxes and we'd be really happy to get it. So what the home is worth to you is really important as well. So that's some thoughts on price. Now we have price, then conditions. Conditions that you put on the offer that you have to satisfy or the seller has to satisfy before the deal firms up. There are some common ones. I do just want to say before we look at these that there are markets in Canada and other parts of the world where no condition offers are more common than they are here, where there is enough competition or reason for the buyers to remove conditions from their offer, which means they're not looking to get their financing approved, they're not going to inspect the home. That is very uncommon in Nova Scotia. We still have conditions on most offers, and I recommend them, especially conditions like the one we're going to talk about now, home inspection. This is a very big asset you're purchasing. Let's get it inspected so that we try as best as we can to have a picture of that home's condition right now. So, home inspection done by a qualified home inspector. As one of your conditions. That's a very common one. If you are purchasing a home in the city on municipal sewer and water, we would say to have the home inspected itself. And then you can also have the sewer line from the home to the street where the city owns it inspected, because the bit that's on your property is your responsibility as a homeowner. So if it's sagging or broken or there's an issue, that's expensive. So we want to know what condition that is in. And if you're looking at a rural property on well and septic, then I'm always going to recommend that you test the water quality, you test the water quantity in the well, and you have the septic system inspected. And again, because these are expensive systems to replace if they're not working, and they are fundamental to the home, right? Water and wastewater, very fundamental. So if there's an issue there, this is most often a grounds for negotiation. So the other thing I do want to say about home inspections is that home inspectors are not miracle people. They cannot see through walls. This is a non-invasive inspection. They're not allowed to cut a hole in the wall to see what's going on with plumbing or do anything like that. They do have specialized tools. And what we get from this is the very best report we can on the condition of the home right now without actually knocking walls down. So you get a very detailed report. And even on a new build, I recommend having a home inspection done. There is virtually no home inspection I've ever seen that comes off completely clean. And it's important that we talk to buyers about the fact that this is going to be a 60-page laundry list of stuff for any house, because as houses age and as we live with them, these are normal maintenance issues. The job of the home inspector is to help us understand issues that may be imminent, things that we need to look at now, or that could be safety issues. And so that we get the best picture we can. Now, in some cases, this is used as a basis for negotiation with the sellers, but at worst, at very least, this is a picture of the home that you're purchasing at the time you're buying it, and it's a great document to refer back to. Another very common condition, obviously, is financing. So you've already got your pre-approval, but this means that the lender is going to review your file and finances and also the paperwork for this. So they're going to look at that agreement of purchase and sale. They're going to look at how much you're offering on the house. They're going to look at the listing cut for the house to see what condition the house is in. Does your offer look reasonable for that? They're going to review all of that before they give you an approval on that. And a few other common conditions we often see are insurance. Now, sometimes it is not really a consideration. If you have a fairly new house, you may not be very concerned about insuring it, but we often put this on for houses that, for example, might be older homes or coastal homes or homes where there may be something in the condition of the home that could suggest an insurability issue. And all this means is that you're going to send the details of the home to an insurance company. Much easier to do after a home inspection when you can answer a lot of the questions, and we help you with that. And they will send a letter of insurability. Basically, they don't insure the home for you at that time. You don't own it, but they will send you a letter that says, yes, we would insure this home. And that is a very nice insurance for you. There's also a property disclosure statement that most sellers fill out, not all the time, but most of the time. And that is a form that they fill out that talks about the condition of the home, repairs that have been done to it, things that have happened during the period of time they owned it. And you may want to sign off on a review of that. And there is also a separate lawyer review, and that is for the lawyer to go over the agreement documents as well and also have a look at the property. So you've placed these conditions on your offer, and you have to satisfy these before the offer can go firm. And the amount of time that you have to do that, say to get your home inspected, be okay with the inspection or any negotiation that's been done, or to get your financing approved, whatever conditions you have, the amount of time you have to complete those is specified in your offer. And that can vary, but it's usually around 10 days. Now, what happens if there's an issue with one of the conditions or when you're finished doing them and you've satisfied them? We're going to get to in just a minute. Because first we're going to look at the third thing. So we have price, conditions, and now we have closing date. This one is really easy to explain. Matching your seller's preferred closing date may mean they save time, money, stress. That's you saving that for them. So knowing when your seller would like to close and trying to match it, particularly when you are in a situation where there may be competing offers, can make this a very important part of your offer. Imagine that they have a vacant home. The longer the closing goes, the longer they have to hold that property and pay for it. So if they have a vacant property, they may be looking for a quick closing. Offer them a quick closing if you can. If you have someone who is maybe having to downsize and move, and they weren't sure if they were going to be able to sell their home right away, they might ask for a longer closing, 2 or 3 months, to get everything done they need to do before they have to go. If you're able to offer them that, do so. It's an important part of the offer, and it is sometimes overlooked in its importance. But for sellers, this can often mean they're saving money or they're saving a lot of stress. Now, the deposit, as I mentioned earlier, in some other markets is more important, and they will be bigger, and they will play a bigger role in the offer. Here, they don't tend to be quite as important, but we're still going to talk about it. So this is an amount that you write into your offer that you're willing to offer as a deposit, and it is due on a date that you set in the offer, should your offer be accepted, because you don't pay a deposit unless your offer is accepted. There's no set amount in particular. We advise people on what we think would be a good deposit. And if a seller decides they want a bigger deposit, their agent may ask for that in a counteroffer. But in Nova Scotia, deposits typically aren't very big. So you may be looking at something somewhere in the range of $4,000 to $15,000, somewhere in there. Now, you only pay it if it's accepted. And once the deal closes, that deposit forms part of your down payment. So for the buyer, it comes out of the same pot as their down payment. Now, people are always asking about this. What about competing offers? How do they work in Nova Scotia? Do we have bidding wars? We don't have bidding wars in the sense that people often think of them in terms of it looks like an auction and things are escalating in real time. We do have what you can think of as a blind bidding system here. We do not know the contents of any other offer, and we will never know the contents of any other offer. The contents of your offer are confidential, and so are everybody else's. The one thing we can typically know, if the seller allows it, is how many offers are on the table at a given time. And that can be very useful for realtors and their buyers to figure out what they're going to do. So typically, how it works is the seller is going to ask for, they'll put the house on the market on Tuesday. They'll ask for all offers to be in on Sunday evening, leave them open for 24 hours for the seller to respond to them. This allows them to look at all of the offers at once. And the progression as this happens is often that the first buyer who puts in an offer, they might come in low because they have no idea if anyone else is going to put in another offer. So why offer more money than they need to? When that first offer comes in, the listing agent will often then send out a message to all the agents who've shown the property or going to show it saying, we now have one offer in hand. And if they're still accepting them at the same time, they're going to remind everybody to have their offers in by that time. So that tells everybody else if you're putting an offer in, you're competing with another offer. Good to know. If a second or further offers come in, at that point, they'll probably let everybody know again, we now have 2 offers in hand or 4 offers in hand. And they will remind everyone of the deadline by which offers have to be in. And they may also say, have any offers in or revisions. And that tells the people who put in the early offer, would you like to revise your offer now? And now that they know they're competing with 2 or 4 other offers, they may decide to change their offer. That's up to them. So the sellers look at all of the offers at once, but what if they decide they'd like to do something a little bit different? So what happens if the seller has set a deadline of Sunday at 7 p.m. for all offers to be in, but somebody decides to put an offer in early? Well, the sellers have often stated that offers are due Sunday at 7 p.m. and sellers will not be considering preemptive offers. That means they will not look at early offers, everybody come in at the same time. Or they may have an instruction in there that says the seller reserves the right to accept an offer at any time. And this is telling buyers we are open to preemptive offers. Now, why would a seller take an early offer rather than waiting for all offers to be in? They may not be feeling confident that they're going to get multiple offers, so they'd like to look at somebody who maybe wants to come in early and rush this, or maybe the offer is coming in at a high enough price and good enough conditions that they're willing to stop the competition and look at that offer. So preemptive offers, generally, if they are done to stop the competition and get the seller to accept right away, are usually coming in high in price and low in conditions. So the buyer's going to do everything they can to entice the seller to take this offer now. And why would a buyer do that? Well, there's a variety of motivations that might push a buyer to do that, including maybe they've already lost previously on several offers and they're trying very hard to get a home. Maybe they have a deadline by which they need to get a home and they're going to solve this problem with a bit of money. Or, maybe they're just super motivated for this one particular home because it's in the right location or has the right features, and they just want to do the best they can to get that. There's a variety of reasons buyers might do it, a variety of reasons sellers might consider them. It doesn't necessarily mean that the seller will say yes to a preemptive offer that comes in. They may decide, you know what, we've had enough interest. We understand that several agents have said their clients are likely going to write offers. We think we're going to risk it and have everybody put them in at the same time. So that is what preemptive offers look like and sort of how they function. Now, from the buyer's perspective, what are you doing when you are in a situation where there are multiple offers and you don't know the contents of any of the offers? How on earth do you manage that decision-making process? So that is, what is your price when there's competition? Here's the process I usually take my buyers through. First, we consider, what don't you know? You do not know the contents of any of the other offers, and you never will. Even when this is all done and dusted, the only offer you'll know about is the one whose price is published when it's sold. So you don't know the contents of any other offers, and you don't know the motivation of any other buyers. Like I was saying with the preemptive offers, you can't necessarily know what's motivating another buyer. Did they make their offer and they're kind of like, on the fence? Yeah, it's a nice house, but if I don't get it, it's fine. Or are these buyers very much trying to find a house in this neighborhood? Or, have they failed 4 times and now they're ready to pay some extra money to get a home? Or is this the perfect home for them? So some buyers have a low motivation and they're putting in an offer, and some buyers may have a very high motivation. So if you fail to get your offer accepted, and then down the road, when they publish the price after it firms up, you think, holy moly, that was nuts. Who would offer that much money on that house? We don't know what was motivating them to want that particular house. So if you don't know these things, then we have to think about what you do know. Now, what we do know is roughly what is that house worth to the market. And we know that by knowledge, experience, market conditions, what's been selling around there, how fast have they been selling. And then we know what this house is worth to you. And this house may be worth a lot to you. You may be one of those highly motivated buyers, or it may be one of these houses that you're like, I'll put an offer on it, but if I don't get it, I'm okay with that. So what is the house worth to you? So you take the things that you don't know, that you don't know the contents of the other offers, what anyone else has offered, and you don't know their motivations. We acknowledge that, we package it up in a ball, and we set it aside. We look at what we do know. What is this house worth to the market? What have we seen going on in this area lately? Have we seen a lot of offers? Have we seen them going above asking? How many offers has the agent told us are on this property? And then what is that house worth to me personally while I'm looking at this? Am I a highly motivated buyer for this house, or a low to mid motivation buyer for this house? And then what we try to find is that line where if you made an offer on the house and you didn't get it, and when they published the price, the other buyer got it for $5,000 more than you did. And do you think, I had $5,000, that wouldn't have been too hard for me to offer. I think the house was probably worth that. Now I feel regret that I didn't do that. Or do you think, you know what? I put my best offer on that and I'm not happy that I didn't get it, but I'm not feeling regret. I didn't want to spend any more. That's the line we're trying to find for you for any given house. Because what we want to avoid is you feeling like you panicked and over offered on a house and then are feeling bad about that later. Or we want to get you to a point where you're content with the offers that you made. And if repeatedly we're seeing that offers aren't being accepted, then that's when we have to sort of pivot and adjust what we're doing to get you into a frame where you can be competitive for an offer. Okay, now let's look at another thing that some people often don't know is possible when they're buying a house. So, if you have a competing situation where there's more than one offer and the seller has a couple of offers that they quite like, they may accept one, that's the primary offer, and off they go to begin the process. But they may also offer a backup position to a second offer. So they will often look for a backup offer as an insurance against their primary offer failing. And what this means is they accept your offer as it is, but with a clause that says we all acknowledge this is a backup offer. It will only come into effect if the first offer terminates by whatever date and time. So if that offer does terminate, your offer immediately becomes active. That means the seller doesn't have to take the property back to market if they don't want to. They can just begin working with the backup offer immediately. And for the buyer, of course, if you really like that house, it doesn't hurt to sit in backup position just in case something does happen. And usually we can write an escape clause into that backup offer that says if you find another house you have an accepted offer on, you can terminate the backup offer, go buy another house. So you can keep looking for houses. And backup offers don't go through that often, but they do once in a while. So it's really a great position for the buyer and can be very helpful to the seller in terms of hedging their bets against a first offer failing. Another topic I'd like to touch on briefly here are appraisals. Now, in some markets, appraisals are almost mandatory for any purchase. They are not as common here in Nova Scotia. An appraisal is an independent estimate of a property's market value that is sometimes called for by the lender to confirm the value of the home before they finalize a mortgage. And these are done by professional appraisers who have a very systematic approach to this. If the lender wants this, the cost of that is about $300 to $400. That's probably going to come out of your pocket. And this is something to keep in mind in certain scenarios because, as I said, they don't happen with every purchase in Nova Scotia. But if you are in a situation where you are competing with other buyers, and let's say you're one of those highly motivated buyers, and you put a big offer in to get a home that you're really motivated to have, the lender may look at that. If your offer is accepted, they may look at the paperwork and think, we want to check and see if the home's value is what you're offering for it. So let's have a look at a scenario of how this would play out. You've made an offer on a home, it's accepted, it was a high offer because you were competing with a bunch of other buyers and you really like this home. So now they've sent an appraiser out. The list price of this home was $499. Your offer was $550. The appraisal comes in at $510. That makes a shortfall of $40,000. Now, your lender, having had an appraiser say this house is worth $510,000, is no longer willing to offer you any more on a mortgage than $510,000. But you've offered the seller $550, and they have accepted that. So, what are some of the possible solutions to cover this shortfall or to bridge it? One solution is that the seller will then lower their price to bring it down to where that appraisal is and cover that amount. Not a super popular solution with sellers, especially if the sellers also have other offers that they could be looking at. The most common solution, honestly, is that the buyers will find extra cash to or other financing to cover that gap. So you can also challenge the appraisal, but again, in a situation where you may have other offers on the table, you're probably not going to have the time or ability to really do that. The seller is looking to get something accepted with less risk. Now, in a situation where possibly someone made an offer that was much higher than other offers, the seller might decide they will come down in price because they'd like to keep the offer going, bird in the hand sort of thing. But these are basically how this is going to be solved. So if you are looking at purchasing a home and you're looking at competing offers, so when I'm a listing agent, if I list a home that's very competitive, nice home, nice area, we put it on at a good price, we get a bunch of offers, and a couple of the offers come in really big, I'm going to call their agents before any offer is accepted and ask them, what happens if you get appraised and it comes in low? What are your buyers ready to do? Are they cash ready for this situation? What is their expectation? So it's important that we, as buyers and buyers agents, have thought about that question before it gets asked of us if we're in that situation. And it's something that buyers really need to be aware of. If you're going to make a big offer on a home, the bank may disagree with you about the value of that. Let's move on now to step 5, conditions and firm up. So we explained some of the most common conditions there. So this is the period where you're going to complete these conditions and go to firming up the deal. So you're going to complete whatever conditions you put on your offer, get your home inspected, do whatever negotiations. And once they're all completed, you have to sign a final waiver that says you have satisfied your conditions and the deal is declared firm. And firm means sold, but not yet closed. One of the things that people always ask, though, is what if things don't go that smoothly? What if we don't just waive all our conditions and it's great? What if there's a problem? So let's say you have a condition of home inspection on, and you have the home inspected and you find a major problem, something we didn't know was there, something the sellers maybe didn't even know was there. And the sellers are either not willing to negotiate, or you're just like, you know what? I wasn't planning to take on a home with this kind of problem, so I really don't want to purchase this home anymore. If you have a condition of inspection, and you can terminate on the grounds of inspection within the time frame that you put for the conditions in your agreement of purchase and sale. So any given condition you put on that offer is potentially grounds to terminate it. And if it's done properly, typically you're going to put in paperwork to terminate it, and you'll have a release of any deposit if you've already paid that on the house. So you typically can terminate and get your deposit back within certain conditions and parameters. Now, if you were to waive your conditions and say, we're happy with everything, and the deal firms up, and then later on you decide that you would like to terminate, that is when you're not very likely to get your deposit back, and the sellers may be at liberty to sue you for a variety of things. So it's really important when we're doing conditions and when you're waiving them and satisfying them that we're paying attention to the timelines, we're meeting our deadlines, and we're making sure that you are satisfied with the conditions being met. And now we're at step 6, closing. This is the great part. It's when you're actually going to own the property. So the date for closing is set out in the offer you made. And as I mentioned before, that can be a really important part of your offer. And this is the date that you're going to take possession of the property, get the keys, move in. The deed goes to you, the money goes to them, the keys go to you. It's a great day. But what happens in advance of that? You have pre-closing. So between firm up and closing day, your lawyer is going to set a meeting with you, and you're going to meet with them, go over all the paperwork, sign a bunch of stuff, and they will give you a final tally for your down payment and your closing costs. And you'll notice those are in bold here. And the reason for that is I'm going to explain those in a little more detail because they're very important. But before we get to the explanation of closing costs, so on closing day, after you've signed the paperwork with the lawyer and you have all of that done, on closing day, we do a walkthrough of the property. Now, some people do it the night before, the day before. I prefer to do it on the morning of closing because it means we're there at 9 a.m. looking at the house and then immediately calling the lawyers to start that closing process. So we're right there looking at the house live. So we go through usually around 9 o'clock in the morning, and this is when we're going to check that everything is as it should be. And by that, I mean as it was when the home was inspected and the deal went firm, that there have been no unexpected changes, no new holes punched in the wall, nothing is broken. We're going to check all the appliances. We're going to be checking the heating systems, doors, windows, everything, just to make sure they're all as we're expecting them to be. If everything is fine, then we contact your lawyer and we tell them you're ready to begin the closing process, and they start. Now, this can take a few hours or it could take the rest of the day. And that's why you see in bold print here, do not plan to move in or have services done on closing day. You may not get the keys until later in the day. Until the lawyers have actually said this is closed and we can hand over the keys, you actually can't come on the property. You can't put a moving truck on the property. You can't do anything. So plan your move in, plan your services for the day after closing. But what happens if everything doesn't go as smooth as butter at the closing walkthrough? Well, for a smaller issue, let's say we're doing the walkthrough, we're testing the appliances, we turn on the washing machine, it starts to leak out the bottom. My first question to my buyer is this an issue to you? I always have to check with them, is this something that's important or not? Because every buyer is a little bit different. If my buyer says, yeah, I don't want to have to buy a new washing machine, this was working at the inspection, then we will call the seller's agent, let them know there's a problem, have a chat with them, and probably what will happen is something called a holdback. Now, this is done through the lawyers, as are many things after firm up. And what this means is, in order to not have to stop the closing right now over a washing machine, a small amount of money, of funds, will be held back from what the buyer is giving to the seller until this is repaired or replaced. The lawyers will draw that all up and the closing gets to continue. This is a great way to handle smaller issues that can be dealt with and allow the closing to go on so we don't have to delay that. Now, what if there is a bigger issue? Let's say we get to the house on closing day and a tree has fallen over in the night and landed in the living room, or anything large that would require insurance claims has happened between firm up and closing, because it is the seller's responsibility by the purchase contract that they have to keep the home insured until closing day. So let's say the basement has flooded or there is a tree there. Of course, the agents will immediately, I would let them know there's a tree in the living room, but this then goes again to the lawyers and the insurance company. And basically, the buyer gets to choose. They look at what the insurance company is offering, decide, would I like to take the proceeds of the insurance and continue, or would I like to terminate this offer, stop now, and take my deposit and go? So that is some of the options for when you have a larger problem before or on closing day. Now, let's get back to those closing costs that I said I was going to talk about. These are really important because sometimes the mention of closing costs gets lost along the way somewhere, or people perhaps forget about it. It's really important to remember it because closing costs can constitute about 2 to 3%, maybe even a little more, of the total purchase price of your home. You have to have cash ready for these, and they're not part of your down payment. So it's really important that you are expecting them and budgeting for them. You're going to, for a $500,000 home, let's say on average, you're going to need to budget roughly $12,500 for those, maybe a little more, maybe a little less. So I always tell people, if you're budgeting at 3.5% to 4%, or even a little more for associated costs with buying a home, you'll probably be in good shape. So let's have a quick look at what's in those closing costs. So what is included there, and this isn't necessarily exhaustive, is deed transfer tax. Now that is a tax charged when the deed is transferred. And in most municipalities in Nova Scotia are now at 1.5%. Halifax certainly is. There are a few that aren't, but the majority are 1.5% of the purchase price of your property. You're also going to be paying for the legal fees, somewhere between $1,000 to $2,000, and that's for all the stuff the lawyers are doing. Title insurance, and this is a one-time cost to insure you against claims on the title or issues with it, $250 to $400 just the once. And then adjustments. So adjustments are most commonly for property tax and fuel. And they work like this. We pay property tax in advance. So let's say the seller of the home has paid their property taxes to the end of the year, but you're buying the home halfway through the year. Well, they've already paid property tax. So the amount they've paid is calculated back to the day of closing, and that goes to the seller as part of your closing costs because they shouldn't have to pay tax on a home they no longer own. Fuel is the same. We do expect that homeowners are going to take over a home with a full fuel tank. So nobody wants to buy a home, come there in the middle of February and find out there's no oil. So that gets filled by the seller before closing. They hand the receipt over to the lawyer, and that forms part of the cost of the buyer because, of course, the buyer is the one who's going to use that fuel. Same works for large household propane tanks, like the 300-pound tanks. So those are the most common adjustments you will see, and these are the most common closing costs that you'll see. And I did say, if you have maybe 3.5 to 4.5% of the total purchase price of your property set aside for closing costs and other costs, here are some of the other costs that you can expect. So, a home inspection, if you're looking at one of those, and I highly recommend you do, $500 to $600 on average to have the home inspected. All of these are going to be plus tax. If you're looking at having the sewer line checked, which I also recommend, $250 typically. If you're on a rural property with water well and septic, you can look at water quality tests being anywhere between about $150 and $350, depending on what you're testing for and how fast you want to do it. Water quantity, which is where they're going to test the flow rate on that well, is $300-ish. And a septic system inspection, you should expect to cost at least $300 to $400, possibly more. If you get an appraisal called for on your property, that will be another $300 to $400. And then you also have to remember about moving costs, which can be very variable depending on how much you have, where you live, and where you're going. So those are the 6 basic steps: pre-approval, hiring a realtor, house hunting, making an offer, your conditions and your firm up, and your closing. A couple of extra things I also wanted to talk about here just briefly. First, who do you need, right? So you can use the services of any or all of these people, or none of them if that's how you're so inclined. But typically you're going to need a realtor, a mortgage broker or a mortgage specialist from your bank, a home inspector, and possibly some folks, like some home inspectors do all of it. Some home inspectors only do homes. We may need to then hire the companies that do the septic inspections and that sort of thing. But they're all lumped in there. Lawyer as well, to go over not just the documents, but also to do all the work they do after firm up, where they're doing title search and making sure everything is as it should be. And then also potentially an insurance broker. If you're getting insurance for your home, you may decide to go with the company you've always worked with, or you may want to talk to a broker and see what products they can offer you. And possibly you may also need to talk to contractors or tradespeople. That can happen sometimes during home inspection. If we come across something and we want to negotiate on it, the homeowner may ask for a quote, so we may need to bring in some tradespeople or contractors to look at an issue and give us a quote for it. And I also want to briefly go over some first-time home buyer programs and incentives. And if you remember back to the beginning, first-time home buyers is a fairly broader category than you might think. One of the things the Canadian government has done recently is made the maximum mortgage amortization period 30 years now for first-time home buyers. And that's previously it was 25 years. So this has stretched out the amount of time you can take to pay your mortgage, which can help with the monthly payments. And again, briefly here, I'm going to talk about a few of the first-time homebuyer programs and incentives that we have here. I am going to give you a QR code in the next slide, which is the last slide. We're almost done. So I'm going to give you a QR code. It will take you to my website, to a page that has links to all of these programs with more information about them. And of course, I'm always happy to answer any questions. So there is the RSP Homebuyers Plan. This allows you to use up to a certain amount of your RSPs towards your down payment. That can be very useful. It does have to be paid back. There are a variety of tax credits and rebates that I will link to on my website. Federally, you have the First Home Savings Account, which is a registered savings account that you can use to save up for your down payment, your first home. And provincially in Nova Scotia, we have the Down Payment Assistance Program. And this is an interest-free loan that you can get to help you with your down payment. All of these programs, this one included, have parameters for who can and can't qualify for them. So, for example, on that down payment assistance program, your household income has to be under, I believe, $145,000 as of this date. Maximum home price in the Halifax area can be $570,000. And then they have a variety of qualifying things for the purchasers themselves, including pre-approval, credit scores, things like that. So go to the QR code I'm about to show you, and you can get more information about all of these programs. And here it is. So just snap a picture of that, head over to my website. There's links to all of the information I've given you here, the programs, the services, the definitions. Everything is there for you to look at. Of course, you have this video you can go through anytime you want. And as always, you can text me, call me, email me anytime. I am always happy to have a no obligation chat, answer any questions you have about buying a home. I'm Cheryl Cook. I'm with I Love Homes at Remax Nova in Halifax, Nova Scotia. We'll see you next time.